one of our taglines at Speyside for a long time has been liquidity is life. And it really is true. It's, in difficult times, having liquidity and being able to buy things at discounted rates really, really does work quite well. So we definitely look at that. And, sometimes it's not even that the economy's bad. It could just be, different people have different reasons for needing liquidity. It could just be like, unfortunately, it could be, somebody passing away, or it could be somebody runs a business poorly and therefore it's insolvency or bankruptcy, or it could just be a situation where somebody has an asset on the books that, like a hedge fund or another private equity fund where, it didn't go the way that they expected it to go, and they want to exit the position. But I agree with him that, liquidity is a very valuable thing to have, and it allows you to be very discriminatory in terms of what you buy and how you buy it and get a really good deal.
Welcome to the Build It to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe the key to scaling and compounding your wealth in life starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth in life so you can give more of all the way to help MVPs. My name is Brett Swartz. Each and every episode, we're joined by the world's top entrepreneurs, millionaires, or billionaires, and they share their secrets and insights with us so we can all level up and make a bigger impact. I'm excited about our next guest. He's the managing director at Speyside Equity, where he's responsible for sourcing, executing, and managing and exiting investments. He has previously held senior leadership and operational roles, and he currently serves as on the boards of several portfolio companies. Before joining Speyside Equity, he was president and CEO of Kelux Heat Transfer Systems, and prior to that, he held roles at Eaton and Hilti Corporation, where he oversaw M&A activities and so much more. Please welcome to the show with me, Eric Wiklendt. Eric, how are we doing?
I'm doing well, sir. Thanks a lot, Brett, for having me on. So you're probably aware, based on the title of your podcast, more money, more problems, but also more attorneys. So just a quick disclaimer here for me. All expressions of opinion provided in this podcast are subject to change with notice and are not intended to be a forecast of future events or results. There is no assurance that the trends highlighted in this podcast will occur in the future, or that the projections, if any, will be met. Thank you for indulging the request to say that.
Fantastic. I get it. That's no problem. And Eric, for our listeners getting to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, absolutely. Thanks a lot, Brett. So I grew up in the Detroit area, and I've been at Speyside, though, the last 15 years. But after growing up in the Detroit area, I went to school at Notre Dame, graduated from there, then came back to Detroit as a consultant. Did a lot of consulting, some bigger companies, that you would have heard of, especially in the automotive industry, and then a lot of smaller middle market businesses, and I really liked that. And that made me decide I wanted to either be a CEO or an investor in manufacturing businesses. Ended up achieving both by way of going back to graduate school out east, and then worked in a couple different manufacturing companies, Eaton Corporation, Hilti Corporation. Ultimately became CEO of Kelux Heat Transfer Systems, which was a small startup business that we grew, and then sold that off about 15 years ago and joined Speyside Equity, where I've been ever since. And Speyside Equity is a very entrepreneurial-oriented private equity firm. So we do LBOs, but we're doing it in lower middle market manufacturing businesses, $50 million to $500 million in revenue. And always looking for exciting entrepreneurial ways to grow the business.
Excellent. And this is really interesting to talk about what Speyside Equity is doing, and acquisition solutions, business transformations. Can you maybe give a little bit about what you guys are doing now, and then what you're seeing in the marketplace?
Yeah, absolutely. So the reason why that's our slogan is because there's kind of two parts of our game. One part is structuring. That's the acquisition solutions part. And then we do a lot of transformations. So that's all about the solutions relative to transformations and whatnot. So for us, we're willing to do deals where it may be somewhat challenging to get a deal done, or it may require a lot of structuring. There may be things involved like assumed liabilities or seller needs or whatever. That's all about structuring. And then For us, our strategy, we call it a fix and build strategy. And usually we're buying businesses that need some sort of transformation, and that's usually the fix part to improve it or make it a scalable platform. And then the second part, or the phase two part, is the build part, which is growing the top line. So part one, we tend to improve the EBITDA margins in phase one, operational focus, and then phase two is the build part where we do bolt-on acquisitions and launch new products and enter new markets and all that good stuff, and that's where we grow the top line.
Excellent. And what type of investments now are with AI and everything that's happening in the world? How is that changing, and what makes it, what are the most attractive opportunities right now you're seeing?
Yeah, so for us, in our systematic approach to transformation, we call it our Portco Value Creation System. So the fix and build Portco Value Creation System, one of the levers in there is Industry 4.0 tools. So obviously AI, robotics, automation, digital twin, Internet of Things, all that good stuff. And what we're seeing is that in the kinds of companies we like to buy, $50 million to $500 million in revenue, manufacturing and value-added distribution businesses, a lot of those smaller companies can compete with larger companies nowadays by using those technologies and disintermediating bigger companies. So it's always been true that small companies have the ability to move a little bit faster than bigger companies, and but bigger companies have like the benefit of scale and the ability to kind of turn the crank on a very systematic approach. Well, now with a lot of those tools, you're seeing an opportunity for smaller businesses really able to eat away at the competitive advantage that bigger businesses have. So that's really exciting to us, especially as manufacturing is nearshoring and reshoring and onshoring. Seeing definitely a change in markets around the world in terms of less geographic world global view and more of a regional view is what's starting to occur. So we think that's good. We think those tools, Industry 4.0 tools, are really helpful for that, especially in North America, which is where we primarily tend to invest and where we like to hunt for businesses to buy. And we see that being disintermediation opportunity for those smaller companies.
Excellent. I'm speaking with Eric Wiklendt, everybody, and you can find more about him and his company by going that he works with, SpeysideEquity.com, SpeysideEquity.com. How do investors work with you? What does that look like if someone's like, yeah, I'm interested in what Eric and his team are doing? Is it something where passive investors can be an LP or a part of your guys' fund?
Yeah, we closed our last fund about 6 months ago, so we're not currently raising a fund. So commitments are all in, but probably in a couple of years we'll be raising Speyside Equity Fund 3, which it's a little bit of a misnomer. That will actually be our fourth institutional fund, but so we will take investors. We're happy to talk to people when we're raising that. In a couple of years, definitely we'll be looking at who wants to invest. We tend to have mostly institutional investors, but we do take high net worth individuals that are accredited investors in our fund as well. Not opposed to that. Tend to be really, really good LPs for us, and we'll definitely look for those opportunities in the future.
You know what the worst thing to do is when you're selling a business? Paying huge capital gains taxes. In fact, they're about 20 to 50% of the sale. And if your client is selling, whether you're a business broker, M&A advisor, financial advisor, they have a large capital gains tax problem. And guess what? We have a solution. We build capital gains tax solutions for sellers of highly appreciated assets, including real estate, including businesses and other assets. And we want to encourage you to take action today to learn about what solutions are available. So think about a business, think about real estate, think about other assets that have at least $1 million net proceeds and $1 million gain, and the sale is going to result in 20 to 50% in tax. So what can you do? Well, you can build a capital gains tax solution with our team. Go to capitalgainstaxsolutions.com or click on the link below to get started. Okay, excellent. And let's shift a little bit gears here to capital gains tax and estate tax. When people are exiting large businesses or real estate, I'm curious what's kind of been maybe a strategy. We also stream on capital gains tax, which is YouTube channels and podcasts as well. So this is kind of our cap gains tax exit planning. I think it's never too early, and it doesn't get spoken of often enough, the planning that's involved for exiting. But I'm curious what's been kind of your maybe go-to strategy or strategies that you've done in the past?
Well, I mean, it really depends on the investor, and usually for us, we always have an LLC blocker in between, and that allows LPs to be as tax efficient as possible. Generally speaking, depending on who the investor is, like we have a couple of university endowments in our fund where, for them, it's a little bit, well, I should say historically it's been fairly simple for them because they're considered like not-for-profits. There have been some things that were proposed during this Trump administration that was going to potentially make that a little bit harder for them. But by and large, a lot of the endowments and trusts and things like that, it's kind of, as long as they keep it inside the legal entity, it tends to be pretty tax advantageous. And then setting things up with an LLC blocker tends to be strong for others. Although, like you see a lot of like family offices and high net worth individuals, they oftentimes have very, very sophisticated tax advisors such that they'll set those things up so that basically they don't come outside the trust or the foundation, so that it can be pretty tax advantageous personally. So I'm just speaking from my own personal view. Like what I've done to do essentially estate planning is set up trusts and various things in myself, either for myself and my wife, so that upon death things like transfer into each other's trusts and things like that, and then also for my kids, which there's a lot of good opportunities relative to that, especially if you're going to donate either before or after your death. In terms of how you do it, there's some very tax advantageous strategies about donating like equity versus just donating straight cash because of the benefits you get in the step up in basis and things like that. So I'm not a tax expert by any stretch of the imagination. And I try to the best part I do with taxes is hire really good estate planning and tax professionals and get them to all get in the same room with my financial planners and make sure that we're doing the right things to be as tax advantageous as possible. The one other thing I would say, go ahead.
No, you go ahead, Eric. Go ahead.
Just the last thing I would say is that, like, generally fund structures, venture capital funds, hedge funds, private equity funds, one of the benefits of being in a fund structure is that carried interest is long-term capital gains tax, not ordinary income, which is a subject of many discussions around politicians these days. So,
yeah, and by the way, I'll mention that too. We help our clients with carried interest on exits of funds or syndications, large positions where they're not 1031 eligible, or there's not a great strategy involved on the exits. We've done this for businesses, real estate, Bitcoin, stocks. Carried interest is typically a business or real estate, kind of venture. But the other one that gets mixed a lot is estate tax, like people not planning for that properly, and or they run out of gifting, they run out of kids to be able to gift to. They have to buy a bunch of life insurance, give it all the way to charity, which is nothing wrong with that. It just can be, it can be a little bit, put you in the box a little bit, right?
Yep.
So we've developed a strategy, and I say developed, we've practiced it close to 30 years now with the tax attorney who created it. Collectively, we've done that. And thousands of transactions, and it eliminates estate tax without any life insurance, charity, or gifting required. And no seasoning required, because a lot of this stuff takes like time and like years of seasoning and setting up and gifting. And the problem is a lot of people either hadn't taken the time, or it's hard to get everyone in the room to do it all. And so they have this exit that's coming in 30, 60, 90 days, 6 months or something. And they're like, man, I wish I would have had something. And this is what we specialize in. We build these trusts that you can sell it in exchange for a promissory note or an annuity contract. Kids can be the beneficiaries to eliminate the estate tax. And you only pay taxes, you receive payments over time. You sell it to a third-party trustee, that's what we do. But it doesn't affect the sale. You just have to set it up prior to the close. The buyer gets everything they bargained for. But it's a very efficient way to exit well. If people want to learn more, go to capitalgainstaxsolutions.com. We also wrote a book on it called Building a Capital Gains Tax Exit Plan. You can find that on Amazon, capitalgainstaxsolutions.com. Okay, so let's keep going here, Eric. So the world that we're in with the changing, interest rates, who knows where they're going to go, right? The wars, right? The lack of affordability for, first-time home buyers, the debt crisis that we're in, right? And the AI and the baby boomers, 4 trillion transfer in the next 10 years. I don't know if this is, I don't know if this is an overstatement, but it feels like so many huge impactful things all kind of happening at once. What's your sense of that, and how does that affect your guys' approach to, buying and investing in these businesses?
Yeah, it's funny you asked that question. I was talking to a buddy of mine the other day, and I was joking, but kind of serious. I said, I feel like we've had a new black swan event every year for the last 5 years. First it was a global pandemic, then it was a Ukrainian war, then it was the Israel-Hamas war, then it's the Iranian war, then it was tariffs, then it's 40 trillion in debt on our heads. And I'm starting to these people that say that we're living in a simulation, I'm sometimes like, maybe there's something to it, because one of their arguments for that is things are going to just get crazier and crazier and crazier. That would be one of the evidences of it. But in all seriousness, the one thing I think about that, at least with our fund, what we're doing, we're designed for chaos, which is the good news. So we see opportunity in chaos, and it's because we have that very systematic approach, the Portco Value Creation System, to how we approach transforming businesses. So what some people might call crazy and chaos, we generally call Tuesday. Just because a lot of the businesses we're buying need to be transformed in some way because maybe they're not performing in the way they should be, and we're used to that. So for us, there's opportunity in chaos, but I think for the average investor, it's a little bit concerning. And the one trend we do see is that there are some folks that are kind of sitting around and waiting to see what happens with the chaos before they want to sell a business. And to your point about the baby boomers, I think the statistic I read, depends whose blog you read or whose article you read, anywhere between 20 and 60 trillion dollars of wealth will change hands with baby boomers retiring or crossing the Rainbow Bridge here over the next 10 years. And that means there's going to be a lot of businesses and investments sold here over the next 10 years. So that will be another, chaos instrument at the end of the day. And for us, we're okay with that. We like to buy manufacturing businesses, and a lot of the Gen Z, kids, they don't want to run a manufacturing business. They want to be an influencer. I read a statistic that 57% of Gen Z wants to be influencers. So they're probably not the ones that are going to run a manufacturing business, but we're happy to buy those businesses. And it's not just manufacturing businesses. It's all these businesses that, baby boomers and older Gen X started back, 20, 30, 40 years ago that are going to change hands. But the economy needs, the world economy needs, the North American economy needs, the American economy needs, the, state economy needs. So we will see opportunity in that, is our opinion going on.
Eric, I couldn't agree with you more. I read a book by Sam Zell, and he's talking about, am I being too subtle, okay? And these are just some of the notes that I have from it, and I think it's so powerful and applicable to what you're saying right now. And Zell constantly invested where others were emotionally incapable of acting, right? And or they just weren't willing to go to these areas, like you're saying, the Gen Z and that kind of thing, right? And the manufacturing and these kind of things. he says when everyone was going left, look right. His examples were distressed office buildings in the 1970s, apartments during inflationary periods, manufactured housing when institutional investors ignored it, distressed debt and troubled companies during recessions. And some of his principles: opportunity increases when uncertainty increases, right? And so he believed that certainty is where profits disappear. Right. Of course, if it's certain, everyone's going to do it, and therefore you're going to have to, pay a premium for certainty, right?
Yep.
In real estate, opportunities is when rising interest rates, banking instability, insurance spikes, which we've seen all of those in the past couple of years. I would say that's kind of the black swan event: the rising interest rates with inflation, banking, lack of liquidity, lack of, debt for some to be able to achieve. Then the insurance spikes that really kind of hit, especially the real estate market. And you have regulatory shifts. And I think some of the key, he says, is buying when others are psychologically cannot. So these are just some of the thoughts. I think it's a great book. Everyone should read. He says liquidity creates power. Right? If you have the dry powder, you have the ability to act when things are, when others don't. Right? And so I don't know if you've read that book or any thoughts on Sam Zell and what he was able to achieve?
Well, I met him actually. So I took, so when I was going to grad school at Wharton, he came and spoke at my real estate development class, interestingly enough. Kind of a funny thing about him and his partner, I think they're both University of Michigan graduates, if I remember correctly. But he donated I think it was $10 million to the Wharton real estate program. So it's it's the Zell Laurie real estate center or whatever, I can't remember, which it makes me laugh. He didn't go to school there. Donald Trump, right? Who's supposed to be a great real estate guy. He's not donated to the real estate program at Wharton, which is his alma mater. But yeah, I met Sam Zell because we did a case that happened to be a case that had to deal with a building that he was involved in. And yeah, really interesting guy. His nickname was the Grave Dancer. So he was well known for, to your point, buying when people were scared and getting really, really good deals on things, and basically when people were desperate. And, he and Mr. Laurie obviously did a really good job with that over the years and made a lot of money doing it. And I agree with him. One of our taglines at Speyside for a long time has been liquidity is life. And it really is true. It's, in difficult times, having liquidity and being able to buy things at discounted rates really, really does work quite well. So we definitely look at that. And, sometimes it's not even that the economy's bad. It could just be, different people have different reasons for needing liquidity. It could just be unfortunately, it could be, somebody passing away, or it could be somebody runs a business poorly and therefore it's insolvency or bankruptcy, or it could just be a situation where somebody has an asset on the books that, like a hedge fund or another private equity fund where, it didn't go the way that they expected it to go, and they want to exit the position. But I agree with him that, liquidity is a very valuable thing to have, and it allows you to be very discriminatory in terms of what you buy and how you buy it and get a really good deal.
Oh, so good, so good, Eric. I'd love that you met him. I wish I would have met him. If people haven't got the book, you should get the book on Audible, because you get to hear Sam actually share his story. And he has passed away, but his voice and his demeanor and his humor really comes out. One of the things he talks about in there is the emotional discipline beats intelligence, right? And this idea that most investments mistakes are emotional, right? Not analytical. And he believes successful investors really stayed unemotional, maintain perspective, act decisively, avoid herd thinking. He talked about how fear creates distortion, right? And he trained himself to think probabilistically instead of emotionally, right? And I think we're in this time of the world where it's never been more emotionally and fear distorted on the media and the world. I think about what's it, the Dark Knight Rises and Batman, the kind of the newer version ones. And that first one, Batman Begins, and he goes to that, he climbs that mountain, and he's in that ninja training, dojo or whatever. And it's all about like fear and distortion and like, and it's like that, we're constantly hit all the time with, I feel like a world that is increasingly fearful and distorted, right, on reality and facts. And so, anyway, I couldn't recommend that book more highly. I've enjoyed it. In fact, I'm talking myself into thinking about reading it again, right, because it's so good. We're way over time. Eric, are you ready for the lightning round?
Yes, sir.
All right, knowing what you know now, if you go back to your 20-year-old self, what's the one golden nugget make sure to tell yourself to do?
Not worry so much about outcomes early on and focus more on the long term.
Excellent, love it. Number one book you've recommended the most in the past year?
Six Sigma for Sales and Marketing.
Okay, I like that. Question number 3, what are you most curious about right now?
Right now, engineering. So I've been doing this app on my phone that's all about learning engineering principles at a really basic level so that they're very quickly applicable.
Excellent. Next question. Number one leadership quote or theme that you strive to live by?
God's gift to you is yourself. Your gift to God is what you make of yourself.
Beautiful. Next question. Number one way you're using AI?
Mostly for AR and AP in the front office, or I guess that would be the back office. And then for understanding opportunities for sales and marketing, like time and territory management and sales. And then on the shop floor, using it to understand downtime and Pareto out the issues.
Excellent. Is there a particular tool you're using, like cloud versus ChatGPT, or?
We use them all at different portcos. So it just depends on, whether we want to use Claude or Grok or ChatGPT or, whatever they're happy with. The one thing that's critical there is that in our fund, we have to keep it as a closed system. And by the way, everybody should be doing this, because you don't want to put like SIMs out there in like just open source stuff, because then like certain information is out there. So you gotta make sure it's almost, you don't have to have like air gap computers per se, but like you do need to make sure, like if you're gonna run like certain legal things through AI, you got to make sure that it's it's shut off from the outside world.
Excellent, makes sense. And very last question: after all the success you've had and all the companies that you've helped to build and invest in, what's the best way that you keep a stewardship mindset over ownership?
Yeah, so I think it's thinking about things in terms of like, how does this affect my kids and my kids' kids, like in the future? Like, obviously you want to do a good job for LPs and investors and make tons of money for them, but we also want to leave the world a better place for the future, and that's stewardship in a nutshell, right? So it's planting the seed for a tree that you'll never get to see grown, but you got to plant those seeds and make sure that it is a little bit better than you left it.
Eric Wiklendt, it's been amazing to have you on the show. Thank you for sharing your wisdom. Thank you for spending some time with us today. For our listeners who want to get in touch with you, one last time, what's the best place for them to find you?
Yeah, you can find me on our website, which is just SpeysideEquity.com, all one word. Or if you go to my LinkedIn, my phone number and email are listed there as well. You can hit me up either way. Text me, email me, give me a call, whatever's easiest.
Awesome. Thank you, Eric, so much. And I also want to thank all of our listeners for listening and reviewing another episode of the Build to Billions podcast, also streamed on Capital Gains Tax Solutions podcast and YouTube channels. And we're on this journey with you to scale from millions to billions. We give more all the way to help MVPs, the most vulnerable people. My name is Brett Swartz. I want to encourage you to take action today, especially if you have a large exit and you're facing massive capital gains tax or estate tax challenges, and you're looking for a strategy that gives you the ability to defer cap gains tax, eliminate estate tax without any seasoning, life insurance, gifting, or insurance required. Just go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. Appreciate you listening or watching out there. And we'll talk to you all again real soon. Bye now.